Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on December the 18th, 2016. In this edition of your weekend video newsletter, we'll cover the indices, all of which moved lower, with the exception of the industrials, which were higher only because utilities, a component of, continued to push higher. Tick and Tick Q, we have institutional sentiment, still bullish, but we're seeing Tick Q for the NASDAQ in a topping pattern that could turn lower. NYSE and NASI, the McClellan oscillators for both, are in a plateau and could turn either way after reaching a high post-election. Breadth is tapering off. The New York high-low is trending lower, and we have the high-low percent at 8150, drifting a little bit higher with NYAD lower after an apex in that indicator. So advanced decline continues to move off of its highs. CPC, we're moving off of a bearish signal. We're right around 0.90, and VIX is at 12.20, which is still complacent, so we could see a spike in the short term. US dollar 102.92 was the close, with a high last week at 103.54, plus 1% for the week. Bonds, we have yields all higher versus bond prices being lower, with TLT off more than 17.41% for the year. And we have the bond stock ratio continuing lower with no change in direction. Commodities, we have crude higher for the week. We have copper in a flag below the 9 and the 20 EMA, so that's slightly bearish. And we have gold accelerating lower. XLP XLY ratios at a bottom. The sectors are more bearish than bullish, and we have defensive sectors appreciating. XLP and XLU are both higher, and the heat map is gradually starting to move towards the red zone, currently more yellow than green. Fed rates are higher now by a quarter, that's in the book, and bottom line, we are at an inflection zone or currently in a flag formation. NASDAQ SPY and IWM 60-minute charts are all below the 9 and the 20. So until that changes, we have to be leaning more bearish than bullish. IBD 50, we'll look at some setups. Financial stocks, steel, RSI is dropping on most of them, and medical and retail is looking better. Bulkowski 4 or 5 are red, and CPI signal is mixed since December the 16th. Okay, so let's take a look at the indices. This is the 60-minute chart of the spiders. We are very interested in RSI, which continues to drop. In order for you to get bullish, you need to see this turn back up and break that trend, and you need price to get back above the 9 and the 20 EMA for starters. MACD continues its slope downward. It's about to cross through zero. Stochastic is near the green zone, and tick is ambivalent and moving sideways. So institutions aren't showing a bullish hand, so to speak, but it's not bearish either. So if this turns down on Monday, that would be a bad sign for the bulls. Okay, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. For you members, as usual, we'll post a watch list later this evening and a blog post with the stocks that we're looking at for a trade prior to the opening bell tomorrow. If you're not a member and you'd like to consider joining us, click on Vinny's blog down below and then click on sign up, and you can check us out for a modest fee of $19.99 a month. You get quite a bit in terms of value, a daily blog post to supplement the weekend video newsletter outlining stocks that we're considering taking trades on during the week. We also have a trading room, we have trade alerts, and a weekly watch list. And occasionally we have members-only live broadcasts covering important issues for your consideration. $19.99, not a bad price for what you get in return.